I am often asked how I deal with opposing wave counts. For instance, a bullish and a bearish outlook at a specific juncture. And I have a very simple answer to this question. I use key levels. We had a great example of this recently in the cryptocurrency Cardano. And in front of you is a 2-day bar range of the cryptocurrency Cardano. And from this chart, I want to bring your attention to the advance from point 02. We're counting a still developing impulse, and from this you can see that purple wave 3 has peaked and the fourth wave correction is unfolding or possibly done. So within the fourth wave of an impulse, we look for the price action to retrace to at or between the 23.6% or 38.2% retracement of the third wave. And while not shown here, this wave 4 has so far tested and got support at the 23.6%, but also it has pulled back to the low of the previous fourth wave at one lesser degree. So that is an area we look for a fourth wave to end. However, we also know that there is room for the price action to push lower and still be within the Fibonacci guidelines we look for in the fourth wave correction of an impulse. Here now is a chart, an 8-hour bar chart that has some more detail for the price action within that purple wave 4. And from this you can see that we do have what could be a zigzag pattern unfolding, where we have a 5-wave decline for the A wave, the sideways corrective price action is possibly a triangle, and then price action will trade lower in 5 waves for wave C to complete the pattern, possibly down to test that 38.2% retracement of purple wave 3. Also, we have a key level on this chart at 1.49. That is red wave C. Therefore, if the rally from 1.02 is the E wave of this triangle, it must end below 1.49. If the price action trades above that level, we have to dismiss this B wave triangle. While of course it is possible that a correction is still unfolding, we know that the triangle we're tracking at this juncture is dismissed. And now taking a look at this alternate, the bullish alternate count that we were working with within the service, you can see that we have a count that suggests purple wave 4 unfolded as a combination, where we had the Y wave of the combination unfolding as a triangle, and possibly that pattern ended at 1.26. So this is a bullish outlook. And we're saying that we will favor this outlook if price action trades above 1.49. And the reason for that is because it will dismiss the other corrective pattern being monitored for wave 4. Therefore, we have a key level that decides one of these counts over the other. Here is an update from the intraday service from the 9th of August at 5:10 p.m. and from that we state that the break above 1.49 earlier eliminates the bearish triangle from consideration and that the bullish scenario has been upgraded to preferred count status. Under this outlook, we'll see if wave 3 of 1 can still trade higher towards the cited target area of 1.53, but a move lower towards 1.4 would likely suggest it has already peaked. So basically we have adjusted our outlook. We are bullish against 1.26 and our focus is higher now in purple wave 5. And here, roughly 2 weeks later, we see that the price action has traded swiftly higher, basically trusting out of that triangle as part of that purple wave 4 correction. And we can see that the advance is a developing impulse, possibly just wave 1 of 5 or maybe wave 5 itself. So this chart is just taken from a few days ago. But it's also worth considering that here on this lower time frame chart, the focus is on 5 waves and impulse unfolding from 1.26. That impulse, it's the very same pattern that we looked at on that 2-bar range. And if we just go back to that 2-day bar range, we see that the 5th wave of that impulse is now unfolding. So it's a 5-wave pattern, an impulse pattern. They unfold on all degrees of trend, or basically all time frames. So now we're focused on the 5th wave pushing higher. We've upside targets for that 5th wave, and that is what we are currently monitoring in this market. So I hope I've shared with you some vital information that should help you when you're trying to trade or decide which wave patterns to use at certain junctures. Rather than just guessing, it's very important to use those key levels associated with the wave patterns when developing. I hope you've enjoyed this video. Thank you very much for watching.